All right, my friends, what is going on? Welcome to another fantastic week of Dividend Happy Hour. I'm so stoked to see all of you guys in here, all 9 of you guys so far. Hopefully more will join as we go. Guys, we have a really fun video planned today. I'm going to be joined by my good friend Russ over at Russ Knopf, Dapper Dividends, and today we are going to be talking about something that I feel like is very important and we don't really get the chance to talk about too often. Both Russ and I are going to share a little bit of our investing stories and how we first got into investing and what interested us in this. But more specifically, what it is about dividend investing that draws us to this style of investing when we could be doing so many other things like buying growth stocks, collecting cars, collecting watches, investing in crypto, buying real estate, all these other things. What is it about dividend investing that is so attractive to both Russ and myself? So that's what we have coming up first. And then afterwards, as per usual, we're going to get into some good old Q&A. And so what I'm going to do real quick, guys, is I'm going to bring Russ in so you guys can say hello. And while I'm doing that, let me know in the live chat, or let us know momentarily in the live chat. Let us know where you guys are all hailing from. Let's see if we got some dividend neighbors out there. So I'm going to bring Russ in right now and unmute him right there. Russ, what's going on, man?
Oh. And I'm unmuting myself. What's up, man? Happy to be here on the Dividend Happy Hour. We've got some Pilsner Urquell. I'm doing this in reverse here.
And with that said, hey, cheers to you, man. Thank you so much for coming on tonight. I'm really stoked to be hanging out with you for this next hour. And cheers to all of you guys in the audience out there as well. Let us know where you're all hailing from. Russ is over there in Chicago or near Chicago. I'm out here in Sacramento, California. So maybe we got some neighbors out there, some dividend investing neighbors. Let us know. And, hope you guys have something nice to drink too.
Cheers.
Cheers, man. Thank you again for joining. What are you sipping on over there, Russ?
Pilsner Urquell. So
okay,
Pilsner
yeah, I'm sorry.
Urquell.
You said that just a moment ago. My bad, man.
Hey, it's
okay,
all right,
so
man.
let's see where everyone's from here. We got some friends out there in, let's see, who we got. We've got Shamir. Russ, you know Shamir all the way from Canada. We've got Kevin, still in Manchester, New Hampshire. Well, maybe that's what he's saying. We've got, Mountain High is in New Hampshire, maybe. We've got, who we got here? We got
Nick in Vegas.
Nick in Las Vegas. Nick, man, I'll be out in your neck of the woods here hopefully in the next couple of months. We've got Josh down over there in Texas. Great old Texas. We've got Mountain High out there in Manchester, New Hampshire. He's still out there. Was out there last week and the week before, and chances are he'll be there next week as well. I guess stay tuned to find out. We've got S. Smith over there in Yorkshire, England. What's going on, man? All the way from England. Thank you so much for joining us tonight. We've got Will over in Kansas City. Good for you, man. Good for you. We've got Anthony out there in Brooklyn. Good old Brooklyn. Shout out Brooklyn. We've got Marius over there in Romania. Romania, man. That's awesome.
Wow, that's a haul.
Got a couple international investors with us tonight. Guys, thank you so much for joining. That's awesome. We've got Chris over there in Philly. Philly, the best gyms in Pennsylvania. Chris is a big lifter. That's, I don't know, not funny. We got Adam over there in Columbus. We've got Kevin up there in Yakima, just like nice. Mountain High. Kevin, he was in Yakima last week. He'll be there next week. We've got Steven in Elberton, Georgia. Let's go through a couple more. Sam over there in D.C. We've got Growing Back to Basics in Arkansas. We've got Sean in Boston. Delia in Richmond. Oh, Richmond's not too far from me. And then Paolo in Los Angeles. Guys, welcome, and thank you so much for joining. For those of you who are just now hopping on and missed kind of the intro today, Russ and I are going to be talking a little bit about our investing stories and how we got into buying stocks, first of all, but second of all, what it is that draws us to dividend investing specifically. I don't think that's something I've really ever heard Russ talk about. I've maybe touched on it a little bit in my own portfolio. So I'm super excited to get to that. But last thing before we get into that, Russ, if you don't mind, I want to give a quick shout out to my good friend, ex-dividend dad in the Discord group who just passed $40,000 in his dividend portfolio. And oops, sorry, Russ, took you off. What's funny about that, so ex-dividend dad and I don't know if he's in the stream tonight, but he'll watch the replay. First, I don't even know how we got on it, but we've been going back and forth. Like some sort of competition has been established between us. It's like been a race to 40K, and he just totally cleaned me up by about $1,000. I just hit 39K in my portfolio, but ex-Dividend Dad, you got me, man. So congratulations.
You're both winners. You're both winners.
Russ, sorry, man. I've been very long-winded here so far. So I guess let's just get into the main event, man. I mean, would you feel good just, telling me what, even if you remember, what is it that got you into investing in the first place? Like, how did you get into stocks? Because you're a welder, you're a big blue collar guy, and
yep.
That and investing don't usually go too hand in hand. But I mean, what was it that got you into this stuff?
Yeah, so actually, before I start, I want to say that today I hit a milestone myself. Well, yesterday I got paid. So through my job, I have officially maxed out the 401k. And it is second week of August? Second week.
Yeah.
I'm losing. Dude, I'm done. Like, I'm going to get a huge bonus. Bonus. I call it a bonus. But 30% of my pre-tax dollars go toward the 401k. So that gets maxed out. So now I'm going to have more money to invest in the bridge account, buy more dividend stocks, build up my emergency fund just a little bit more. And also travel. Dude, we're trying to pay cash. So next June, we're going to go to Prague and Dublin, which is why I got my Pilsner, which is a Czech beer, in the Irish Guinness glass. So, also Gorilla Nurse from Wisconsin. What's up? I think they might know a little thing or two about beer up there. Yeah. All right, let's see. So I'm reading the I could just talk to the people in the comments. Nobody wants to hear about me. Anyway, so all right, well, what everyone's here for, the big show, is why dividend investing, how I got into dividend investing. So the quick story is a little background. My grandfather always loved investing, but he never really talked about it with me. And I remember him saying he invested in companies like Disney and Walmart and stuff like that in the 80s. When I was a kid, I was born in 78. So in those fabulous, fun 1980s. And we never really talked about it, unfortunately. He died in 2005. But it wasn't until 2017 that I just got bit by a bug where I said, you know what? I think I can invest. I want to become an investor. I don't remember exactly what hit me, but I was like, I'm going to invest. I'm going to become an investor. So of course, like most people, I started out with penny stocks because as I was looking at things like, okay, Walmart's over $100 or right around $100 a share. And, you have the penny stocks like $3 a share, $1.50 a share. And I didn't want to pay commission though. So I found Robinhood. That was the gateway into it. Tried penny stocks, lost a lot of money. And then I wanted to upgrade from penny stocks to swing trading. Went on Udemy, took a few swing trading classes, and that did a little better, but I was still taking some bigger positions. Some of them were a little risky. One of them was NIO. So in September of 2018, I started buying NIO, the Chinese EV car company, after they IPO'd. And it went up a little bit and then it dropped and kept dropping. And I kept putting more money into it. It kept dropping, put more money into it. And the damn thing kept dropping. So I was starting to lose sleep. I was checking at all hours of the night. So pre-market, I think, is at 4 a.m. I'm glad I don't really remember that number, but I would start waking up my body because I was so nervous. I was having trouble falling asleep. And I started waking up around 3 o'clock in the morning, just couldn't sleep because I wanted to know, like, if it was going to go up and I was going to be able to get out and get my money back. StockTwits, by the way, is what I used. I still use it now. I don't know if anybody of you guys are on StockTwits. It's a degenerate playground. It's really ridiculous. It's like a bunch of 10-year-olds talking about stocks, but with raging hormones. Anyway, so back to NIO, I was losing sleep and, I tired at work. And what I do, dude, I can't be tired at work. I could get hurt. And then after maybe like 3 nights of this, because they were getting hit hard and everybody was just dumping on them. And I was down like 90%. Oh, wow. It was bad. So I was laying there one night and I thought, okay, I'm either going to quit investing altogether because I'm losing money and I'm losing sleep. And I'm pretty sure this is not how investing is supposed to look or feel. And then I don't know if it was, divine intervention or whatnot, but my grandfather popped in my head. And I remember him saying about buying companies like AT&T, Walmart, Disney, and they good paying dividend companies. They pay dividends. So I was like, I didn't really know what dividends were. I know when something pays dividends, obviously, but in the world of stocks, I didn't know what it was. And started Googling it, went down the rabbit hole, and I still haven't come back up. Obviously, I've gone pretty far down because I have my own YouTube channel. I have the podcast, the website, and I needed more people to talk about it. I needed more of an outlet. But the reason that I found out that it works so well for me is because I loved my stocks. I would fall in love and marry my stocks. And they would say, when you're trading, now you're supposed to just date them for a little while. You don't fall in love and marry them. I was marrying everything, dude. The junkiest of the junk penny stocks. I'm like, I can't sell. It's going to go up. So I would hold it and I'm down. But when I found dividend investing, I was like, well, let me get this straight. I buy really good companies. So I'm owning a part of a really solid business like PepsiCo. The key and the name of the game is to hopefully never sell. So you just keep holding and you're going to get paid 4 times a year to keep holding these world-class businesses. Obviously, there's yield traps and whatnot, but if you're doing it right. So, dude, it fit me like a glove. And I've just been dividend investing ever since. I love it. Yeah, I do a few, I'll try a few swing trades here and now, get bit with the bug and try and see something that's down way low and throw $50 into it. But I mean, by and large, just dividend investing fits me like a glove because I married PepsiCo and I love it that, I almost wore my Pep shirt tonight, my Pep shirt, but dude, I'm never going to sell it unless something, you and I, we understand, we say never, but obviously
there's caveats to that for sure.
If it turns out that some Ramon LaGuardia loses a screw and he's trying to put, poison in the food to kill people and he's part of a cult, yeah, I'm probably going to sell them then. but you know what I mean? Like,
oh yeah.
So I'm not going to sell. I just noticed, the green glint caught my eye. Stephen Bishop, dude, he super chatted you $5.
Oh, really?
How about that? Yeah, right there. He's super chatted me a few times and don't tell me that's your first one.
That's the first time that's ever happened.
Steven, look what you did. Man,
thank you so much.
Look at that, man. You just made $5.
Are you asking, Steven, just to clarify, are you asking Russ about the S&P or are you asking me? And also, man, thank you so much for the super chat. That's cool. Thank you.
I'll answer real quick. So
yeah,
I have no idea. I haven't even checked. I don't really care. All I care is that my dividend yield keeps going up and the dividends keep increasing and then my yield is going up. I would like my yield to beat the S&P. And I think my yield right now, just with this portfolio that I share, I think is like 3.83%, if I remember right. And the S&P is like I don't know what it is now, but the last time I looked, I want to say it was like 1.5, 1.4, 1.6, something like that, like 1.5%. So that's pretty much my goal because, we buy these great businesses and hopefully people are always going to want great businesses and they're just going to keep increasing in value and growing their dividends. So go ahead.
Yeah, I got to say, I don't know either if I'm beating the S&P or not. I know year to date, I'm certainly beating the S&P. I might be down a couple percent at most year to date. And Stephen, I'd have to dive a little bit deeper to really give you a better answer. But I know I'm down maybe at most a couple percent year to date, whereas I know the S&P and the other major indices are down a bit more than that. I'd actually have to, let me look over here. I'm on Seeking Alpha on my other window. So year to date, the S&P is down 10.77%. I'm definitely not down that much. So I probably have a leg up on the S&P by, I'd say 5 to 8% year to date, but anything beyond that or before that, I'm not quite sure. But that's like the great thing about dividend investing, right? Is if you do it right, if you're buying those good companies, there's not as much volatility, and your drawdowns when we do have these dips in the market hopefully shouldn't be as volatile as they otherwise would be if you were investing in different kinds of companies.
But even when the market does draw down, that's the beauty of it, because then the
That's the
yields
beauty
are
of it,
going, you
man.
can buy more. And just like Nick said, that yield on cost going up is the name of the game. And that's just one more benefit of me holding PepsiCo and never selling, is that yield on cost is locked in low, and it's just going to keep go. It's going to get silly. Like, I think Ian Lopic on his Altria is, I think he's at like 10%. It might be
Wow.
20%. Does anyone remember? He's talked about it before. He's either at, I think he might be at like 20%, almost 20% yield on cost on his Altria, because where he started buying it. I mean, nuts.
Hmm.
That's nuts.
Yeah, man. I remember kind of switching gears a little bit. I remember so growing up, like my dad's pretty into investing, both in real estate and in stocks like that. And from a young age, I was probably 11 or 12, maybe a little bit older than that when they made my dad and my stepmom made a custodial account for myself and my brothers and my stepsister. And it was one of those things that became kind of the running joke in the family, because from then on out, every birthday, Christmas, any holiday where there was gift giving, we always just get, money to invest in our Charles Schwab portfolio. And, being a young kid, like a young teenager, you don't get it. Like, that's not what you want to get for your birthday. That's not what you want to get for Christmas. And it was funny because they would say, you'll think of someday. You'll think of someday when you get older, like you'll realize that this was awesome. And we were like, okay, yeah, okay, sure, whatever. Okay, stocks, cool. But sure enough, like they were right, man. And I remember it was like that until I was I'm 29 now. It was like that until I was probably 24, when it kind of started to click a little bit more. So, every birthday, Christmas, get a few $100 going into Charles Schwab. That was building over time, which was great. And my dad was just picking out the stocks for me, but it was pretty decent companies for the most part, like Berkshire Hathaway, a lot of SCHD, maybe some ExxonMobil, like things like that, pretty good companies. And I remember when I first started kind of branching out onto my own, the first stock I ever bought was CRISPR. Do you know CRISPR, Russ?
Yeah, the gene editing company, right?
Yeah.
They were just down in the 50, like 59, $60 not too long ago.
Yeah.
I almost bought some.
I'm actually going to go over to the screen because I want to show you guys this. So I bought CRISPR. You guys are gonna laugh at me for this one. I think it's CRSP. There we go. CRSP. So I had heard of CRISPR on the Joe Rogan podcast back in the day, and he was all about CRISPR, saying it was going to be the next big thing. And so I was like, maybe there's an opportunity here. So I probably bought it, guys, honestly, back probably in here, maybe between 50 and $60 per share. I'll tell you what, I sold right up above 100, probably going into 2021 was when I sold. Maybe, no, a little bit before that, maybe somewhere in here. But long story short, luckily made some good money. Oh, sorry, Russ. Made some good money on that one. But after that, kind of, Russ, to your point, even though I was up on that sort of stock, I was still checking it all the time. And I was so stressed out trying to time, when should I sell it? I'm doing good. But like, when do I get out? What am I supposed to do? Because I don't know anything about this company. I don't even really hardly know what they do. I just know Joe Rogan talked about it and it sounded really cool. And I know it's working out so far. So, I ended up selling for a profit, kind of maybe did that a couple more times. And I remember maybe in 2020, like when the pandemic and stuff started, just like many people, maybe actually a little bit before that, I decided to get a little bit deeper more into dividend stock investing. And at this time I would have been 26 or 27. And I don't know. Something clicked where I started to realize the importance of doing it. I didn't know how to do it, but I just knew doing it is something that's going to be important, especially as the years go on. And I understood if I start now, I'm going to have more time to figure out and make it work and whatever. So I understood that. And so I decided to, jump a little bit more into it. And I went to the first place that most people go when they want to learn something new, which is YouTube, right? And that's when I don't even know what I was searching, if I was searching dividend stocks specifically or how to invest in stocks or investing for beginners. But I stumbled on a few channels that were specific to dividend investing, one of which, the first one, was the Dream Green Show. I don't know if anyone out there watches the Dream Green Show. I'm actually surprised whenever I bring him up, a lot of people haven't heard of him, but Zeke over at the Dream Green Show used to be all about dividend stocks. And man, I just really liked what I heard. It started to click. It was like they're just going to pay you, pay you a dividend. They're going to pay you cash for doing nothing but owning shares. And then all you have to do is reinvest those shares. And over time it grows. It started like the whole, how it works started to click. And it was like, God, I could just see, like, I know I need to play the long game here, and I can afford to do that because I'm so young. So it's like, man, if I just do this for 20 years, like I'm good. I'm good. And so then I started to want to learn more about it. And then I kind of branched out into other channels. And that's where I found PPC Ian and Russ. That's where I found your channel. Before I started actually investing, I had found your channel and watched a lot of your videos. And which is, it's surreal that we're doing this today. But then I realized, like, no one knows about this stuff. Not as many people know about this stuff as they should. And so that's one of the things that inspired me to actually start my channel and start talking about it. And it was like, I don't know a whole lot about this stuff, but I know there's got to be some value in at least telling other people what I'm doing, and I can learn over time as I go. And that kind of led me to doing what I'm doing now, and led me here. And so that's kind of my investing story and how I came to become a dividend investor. But like you said, man, I think you hit the nail right on the head. It just fits you like a glove. It really does. It's like it clicks. It's something tangible too, compared to other. It's something tangible, and it's a little bit more controllable. You can control where the cash flow is coming from, and kind of like you said earlier too, you don't have to be slave to the share price, whatever the share price is doing.
Yep.
And sorry, dude, I'm getting distracted by the comments. I had to turn them off while I'm talking.
You know what it is? It's like when the market crashes and collapses, I'm waiting for a long sustained bear market because, well, they're like, oh no, the market fell. I'm like, oh no, dividend stocks are cheaper. Now the yields are higher. Like, it's a win-win. I mean, I sleep well at night. I sleep very well at night. And if I lose sleep over anything, it's because I'm like, I got to hurry up and buy because the market's going to correct really quickly and go up, and I'm going to miss the opportunity, where other people are freaking out. They're like, oh, the market's crashing. I'm like, yes, I'm excited.
I know.
I'm very excited.
Dude, it's like we're clued in on some secret that that not many other people know, but it's also at the same time, it's like right in front of their face. But the thing is, and I understand why more people don't invest in dividend stocks, because, and we talk about this all the time. It's not sexy. It's not fast. Like, it's not something that's going to bring you wealth overnight. But, like I said, it's something controllable, and it's something tangible too. You can look at it and say, I know my monthly expenses are $3,000 every single month. Man, I just need to get there, and I'm set for life. And then you can quantify and basically reverse engineer and calculate how to get there and build your portfolio around that.
One thing I will say that kind of irks me that I see other YouTubers do is, and I did notice this on Dream Green, was he was doing dividend stocks. I don't think it was Reits. I think it was just dividend stocks, but no, it was Reits. It was monthly dividend stocks. He had a video I saw way back, and he said that, he's like, guys, you buy this, you're going to get your bills paid, your utilities, they'll pay your rent and this. And the only thing that's not true, but I really wish they would say they're going to pay your rent if you got like an extra $1.5 million lying around to just put into dividend stocks right now. But if people are just putting in $100 a week, $200 a week, that's really good, but it's going to take years. And it's just sometimes the way they present it, it sounds like this is something like you just buy realty income and next month they're paying all your bills,
Mm-hmm.
So
yeah, that's true.
Might be nitpicking, but
no, I get what you're saying. But you know what too, man? Like, and this is something I think about too. I think about all the other ways that this hobby has like dripped into other aspects of my life. Like the things I've learned from dividend investing, you love doing this. Like I know that you're like me in the sense that you look forward to buying stocks every single week because you know what that means. That's one step forward. And so, you think, and I'm sure a lot of you guys out there watching, a lot of you in the live chat think too, man, what can I do? What can I do to buy more? I just want to keep buying more. And that trickles into other aspects of your life too. That forces you to think about the things that you're spending money on. And it's not saying you need to live like a hermit and not have any fun, but it does, in some sense, make you audit where your money's going every single month. And I think that's important for so many people, number one. But I know, speaking personally, number two, it motivates me to find ways to increase my income and work harder and do more positive things that can help me reach that goal faster. Because, it's all those little things done week after week after week that are going to make the difference over time, that are going to compound over time and could save you years on your dividend investing journey. That's also too. I mean, I'd be lying if I was saying that wasn't one of the motivations for starting this channel as well.
Just like Dividend Fire here said, $20 a week is better than nothing. Absolutely. Yeah. $5 a week is better than nothing.
Yeah.
Absolutely. Man. Absolutely. So, I say absolutely.
Yeah. So cool, man. I think that's a great place to kind of transition. Guys, in the live chat out there, maybe you guys are already kind of starting to drop it there. I'll go through the comments in a sec, but I want to turn it back on to you guys. Let us know, and if you're watching the replay, leave a comment below. Let us know what is your reason for investing, number one, but more specifically, number two, what is it that draws you to dividend investing specifically? What is it about this particular style of investing that really tickles your fancy? Let us know in the live chat here. I'd be very curious to hear your guys' perspective on this. So, and while you guys are doing that, I actually want to give my friend Turtle in the Discord actually earlier today asked a really relevant question, kind of just along these lines. We didn't coordinate it or anything. He just asked. So I want to put some of those responses from some of the guys in the Discord. And with that said, if you guys want to join the Discord group, actually, totally free. And it's basically just, right now we're at over 1,000 different dividend investors in there. All you need to do is click the link in the description of this video. It's just a big group chat where we talk dividend investing, share our research and our analyses. It's just a really good group of people who are always down to lend a hand and share their experience. Really, really good group of people. So I want to put some of the responses on the screen now from some of the guys in the group, from the people in the Discord group. When asked from Turtle, you can see right there, what is everyone's financial goals? Why do you all invest? And North, who I see here in the live chat, check out his channel as well, EBS Invest. He just started and he's off to a fantastic start. So definitely go over and pay his channel a visit, watch some of his videos. He says, I set a lot of short-term goals for myself, but I want to retire at 44 or at least be a millionaire by then. So that's a good goal to have, and I think he's well on his way. Moving on, Turtle himself, the legendary Turtle, says, I'm wanting freedom to help the animals. So Turtle, I'm not gonna get this quite right, but I think he was just recently in Vietnam actually studying turtles. Big turtle guy, as I'm sure comes as no surprise to you guys based on his name. But moving on, Jacob Morris, also check out Jacob's channel, really solid YouTube channel here. His reason for investing is his long-term goal is just to be financially secure and to be able to do whatever he wants without needing to make it money. And yeah, that's a very great way to put it. And then Toggle here, has kind of a similar sentiment. I'm shooting to retire early or at the very least work part-time at 55 years old. That's great. I'm currently 32, so if all else fails, my dividend portfolio will be worth enough to live comfortably in retirement, along with my 401k and 2 pensions, assuming they're still there when he retires. We'll see what happens, man. Keep us posted. And then Jake from State Farm. Wow, what an honor. Jake from State Farm says one of his goals is not only to learn about investing and which strategies he prefers, but to be able to have enough money to do what he wants from some dividends without having to sell stocks and also having some left over to continue growing. And real quick, I think I have one more to get through, but I think that's also really important too. That is one way that dividend investors benefit from other compared to other types of investing, because if you're just buying stocks that don't pay dividends, at some point you're going to have to let go of those assets, and you're going to be diminishing your portfolio and all, which you've worked so hard to build over the course of years. And so it's like that's another key component to dividend investing that really sits well with me. I don't know about you, Russ, but I'm sure it is too, huh?
Yeah, it does. I know Big Warren B, the Oracle of Omaha, Master B, he would disagree just a little bit, because that's why he likes to get dividends, but it's funny, he doesn't like to pay dividends because they're kind of like double taxation. But he has shares of, I know, like the Washington Post that he bought, I think in the 90s, if anyone remembers, correct me, or and he hasn't paid a penny. I mean, he's made billions of dollars on it, but because he hasn't realized any of those gains, he hasn't paid a penny on it. So, but then you still have to sell. And I just, again, man, I keep thinking of my PepsiCo shares. I hope that I will never sell these 100 shares. I may get a little greedy with options, and I cut it close a few weeks ago. Won't get into that. I got scared by the dividend gods, and I'm now on the straight and narrow with PepsiCo and the options. But yeah, man, I hope I never have to sell them. 50 years from now, I can pass them on to my grandkids or whoever, and that's the plan. Things change, and I'm always, trying to be malleable and flexible. But you hit it on the head, man. I mean, you said it. I don't know when to sell. I don't know when to sell, and I lost a lot of sleep trying to worry about selling. And today, actually, I say that I did sell some Merck because I'm a little bit worried with the healthcare sector after they passed the Inflation Reduction Act. And, Medicare is going to be able to negotiate with, I think it's the top 20 drugs, but it's going to be in 2025 or 6, I believe. So there's still a few years. I mean, please, someone correct me if I'm wrong on that. But that made me a little bit nervous. But it's funny, I was just looking, and they're up. I'm way up on Merck, so I didn't lose any money. But I'm actually going to be buying some Cisco. But I was looking at that and thinking that this sucks. Every day this week, the market's just been up and up and up. And I'm like, this is broken. Go down. I'm like, willing it to go down. I'm like, get red.
I know, man.
And
did you end up buying anything this week?
I did. I bought Cisco. I'm going to try to get to 100 shares of that. And if I were to sell, so I've sold, I don't want to spoil it, but I will, whatever. I've sold some Advanced Auto Parts. I've sold some Merck, and oh God, I sold Gilead. I sold Gilead because of the whole, this whole pharmaceutical. I almost just want to be in Johnson & Johnson and a little bit of Merck, but I bought some Cisco, and I'm really, I like them. I might do a video on them, but I like where they're at with their free cash flow ratio. And I think they kind of got hit hard by the supply chain. Their last earnings call I listened to, and they even said that it's supply chain related. They even said they had a backlog of orders, that everything's looking real good. But the chip shortage and the supply chain issues really hit them hard, and labor issues, that kind of the trifecta there. So yeah, I've been buying Cisco, and I didn't want to deploy it all today. I got a bunch of cash sitting there, and it's hard not to. And I'm hoping for a pullback next week. I was looking at
next week brings.
I was looking at the chart. It looks like the S&P 500, the SPY, is got some down. There's a gap down. I'm hoping it's going to hit. So in the next week or two, I'm thinking the market is going to drop. I think there could be a lot of short covering rally going on, meaning that because we're in a bear market, a lot of people were short. So as soon as it starts to turn a little bit and making its way up, the shorts start covering when they have to buy all those shares back at higher prices, and it's just the snowball, So I think we're in a little bit of a short covering rally, and we'll see. It might have gone up too far too fast, and I'm hoping that's the case because I want some cheaper stocks. I'm selfish, Yeah.
Nice, man. So I want to put some responses on the screen from some of you guys in the live chat. Basically, answering in response to your reason for investing. Starting here with Shamir, who his reason for being a dividend investor is FIRE. He's trying to get that financial independence and retire early. And he's also on board with owning great companies, which you can't blame him there. Love to own some great companies. One of my favorite things. Moving on, Rex here, his motivation is to supplement his retirement. And he's also not someone who wants to sell his assets. That's good to know as well. And let's see here. Sean says, dividend deposits are like a slot machine to my broker's account. Yep, that's a funny way to put it, man. Oh, Paolo, man. Hey, he caught me. Ryan is drinking wine. I know. Yeah, I'm sorry, guys. I don't know. I don't know if I have any way to explain myself. Wine just sounded really good tonight, so I just went with it. So anyway, moving on. James, I want to invest to have FU money, man. Someday, man. Someday. Yeah, keep at it, James. Keep at it. Let's see here if we can find any more.
Dude, that's what I want. That's FU money. Like, I kind of like my job most of the time, but I've said it that I would love to just hopefully in the near future. And Jeff, my boss, if you're watching, this wouldn't be a surprise, but I want to say like, hey, here's the situation. I'm coming in on Tuesday, Wednesday, and Thursday, but I'm taking Friday off through Monday. No weekends, no overtime. Take it or leave it. What do you say? And that's we'll see. That's wishful thinking now, but that's one of my goals I'm working toward.
Yeah. So you were telling me your goal is to basically at 50.
Work optional. Yeah. Just, I don't know if I would quit because it's kind of in my blood. I've been doing this since 1999, September of 99. So I'm going on 23 years and I've made a lot of good friends. Like I like a lot of the guys I work with. I enjoy going into the shop in the morning and seeing people and driving around Chicagoland all day and fixing things. So I kind of like it. So I wouldn't say right now, I'm going to quit. No, I want to have the option to quit. And at that time, I'll reassess. I don't know if I will. Or like we've talked about, maybe I'll get a blow off part-time job just to get me out of the house and socializing. That's, 4 hours a day type thing.
Mm-hmm. No, man, that'd be a great balance. Work a little bit, come home, work on some YouTube, do some stock research.
Absolutely.
That'd be a really solid balance. So Nick here actually had not so much a question, but he says he loves your conviction in Pepsi and that he buys a share every month. And then Shamir followed that up with, have you hit 101 shares of Pepsi yet, Russ?
No, it was a little bit of a withdrawal. It was hard because after 100 weeks buying a share, it felt weird not buying that. But I've thought about, maybe I should go for 200. But right now it's such a big, out of this portfolio, I think right now it's just about 14%, which I really don't want anything over 10%. Mm-hmm. But I really wanted to do that, just buying what I pinpointed as just a solid quality company. I think the world must agree with me because it's really held up well throughout all that sell-off that we just had. And I just think they're solid. I think they're solid. And I love that. I did a video about during their last earnings call, Ramon LaGuardia, the CEO, said that non-sugar is king. Dude, they are just moving towards, they're adapting. They're adapting and to the changing consumer demands. And that's just the way it should be, because I always say, you guys know that watch this channel, these businesses are living, breathing entities, and any entity's first order of business is its own survival. So companies, they want to survive. And this is where we could get in trouble, just trying to predict the future by looking at balance sheets, because if the company wants to survive, they're going to see what's going on and they're going to try and change it. And I guess the bad companies will ultimately, go the way of Darwin. But yeah, man, they're I don't know what I got off on this rant. I want to hear from you people. Let's talk to more people.
Wait, so are you taking the same approach with Cisco where you're buying a share every week to get to 100? Because I remember you saying earlier your goal is to get to 100 shares of Cisco.
No. So today I bought 5. And with the cash I have, if I were to just buy it all at the market price today, I think I would get to 92. So it's tempting because it's tempting to do that, but I know what's going to happen. As soon as I do that, Monday morning, the market's going to crash and it's going to be down like $4 a share.
It's going to be another Intel for you.
God. Yeah, that's
we don't have to get it. We don't have to get into that. I actually just looked up Cisco though, because I wasn't sure how what their share price was. I thought it was in the hundreds, but man, not even close. $46 a share. Nice.
Yeah, and they had been higher, and I bought a couple at 43.
Mm-hmm.
And, I'm just worried about the pharmaceutical space, and I think people are going to start. J&J.
Yeah,
they've been down 6 of the last 7 weeks. They were down again today, so not a lot. They're just inching their way down. But I'd love them to drop. I would love a J&J drop so I could add more.
Man, I'm with you. I'm with you on Johnson & Johnson. I'm with you on Procter & Gamble too. Would love to buy some more Procter & Gamble. Yeah. Moving on to the next question. Mountain High has a question. Ryan, are you still leaning towards a potential new stock pick? I kind of am. I didn't really get the chance to dive deeper into any of the stocks on my watch list this week, but I got to say, I don't know if you guys caught my recent video from Wednesday where I talked about, 4 cheap REITs to buy right now, but I talked about one called KRC, Kilroy Realty Corporation. I'll actually put it on the screen here. And let me know if you guys can see that okay. I'm actually going to probably do that. Russ, sorry, man.
No, that's
I'm just
better,
going to hide
man.
our faces for a minute. So KRC,
Yep.
Kilroy Realty Corporation, they're a mixed-use office REIT. They've got a lot of commercial real estate. They have, some residential real estate, apartment buildings, stuff like that. And most of their properties are based in like Los Angeles, San Diego, San Francisco Bay Area. A lot of where the tech places are, even in the Pacific Northwest, like Seattle, and they've started branching out into Austin, Texas as well. But from what I can tell so far, this REIT seems to be pretty solid, at least in terms of financials and valuation as well. I mean, year to date, guys, they're down about 21.5%. If we look at the, P to FFO, if we scroll down here on the valuation page, 25% lower than the 5-year average. So this company, just in relation to, that was the sector median actually. So in relation to other real estate investment trusts, this company does appear to be at a pretty nice discount. And real quick too, by the way, guys, we are taking a look at Seeking Alpha here. And if you guys, we're taking a look at the premium version. I know a lot of you guys use the free version, but if you've ever considered checking out the premium version, which give you some pretty cool features, like definitely more financial information, you get stock screener, you get to compare stocks, some other stuff as well, like an unlimited analyses and news articles. If you guys have ever wanted to check that out, there's a link in the description to save $40 on your subscription. I think it brings it to like $16.50 per month after that. So it's really, really affordable and definitely worth it. But getting back to KRC, guys, look at this total revenue going up and to the right, like nothing but continued growth. And if we scroll down, taking a look at the adjusted funds from operation, which is what they used to pay the dividend, we're seeing a very similar story, right? Like going up and to the right. And even with that, if we take a look at the FFO payout ratio, the percentage of these funds from operation that they're paying out for the dividend, it's really not too high. Like, mid 40s to low 50s, like that's not too bad compared to some other REITs out there. So anyway, all this is to say, this is a stock that sorry, Russ, I keep doing that. This is a stock that I'm considering adding to my portfolio. I still want to chew on it a little bit, but I think right now this is the top contender. Some others I've been considering are like Target and Apple, but I'm just not sure. And Russ, I'd actually be curious to hear your thoughts on this because they're definitely moving in the opposite direction from, I guess, where I might want them. What do you think? Are those stocks getting too out of hand, or should one just bite the bullet and pull the trigger at current prices? Because those two are on my buy list right now.
All right. So first of all, that was my daughter I was talking to, my high schooler. She starts high school on Monday, and she wouldn't come on. I was trying my damnedest. I was about ready to pull her, but anyway, teenage girls. With KRC, I have a question. Are you worried at all about the office space?
See, that's one thing that I need to look more into. I'm trying to compile some like different interviews and stuff from the CEO to hear his thoughts on that. And there's a handful on YouTube, but that's something I'm still kind of thinking through. Obviously with the pandemic, there was a huge push to work from home for obvious reasons. From some of the things I've read so far, many employers, in fact, many big employers, there's just something about being in the same space that you can't replicate over Zoom. And I think a lot of employers are realizing that and wanting to call their staff back into the office, maybe not full-time, but maybe part-time. And a lot of the clients of this particular company are companies like Salesforce, I believe like Amazon, a lot of the technology companies. And that's why they're expanding to Austin, because those type of companies are moving out there. And so they're building offices out there. That is definitely a risk, but they're also diversified into like residential apartments, which are popping up all over the place right now. And they're also have a hand in like life sciences buildings and stuff like that probably would be things that you couldn't, you couldn't do from home. You know what I mean?
Dude, you just got a $53 super chat.
What?
Look at that.
What? From who?
Mountain High.
No way.
Yeah. Look at that, man.
Mountain High, man. Thank you so much. Wow. I will do that. Okay, let me just put this on the screen. I want to scroll back up to catch up.
Oh,
check the
that's
rest of
why
the
he did
comments.
it.
But
nice.
Buy yourself a share of KRC. Start it up, man. God, that's so nice. You did not have to do that, man. But thank you. I will do that. I will do that. And you know what? I will make a video on it and I will shout you out. You're way too kind for doing that, but I'll do that. Let me do a little more research first, but I think I'll do it. Nah, you know what? I'll do it. You know it. That's why you gave me that. I'm going to do it.
You got to do it now. You
Heck yeah,
got
I
to
got
do
to
it
do
now.
it. Man, thank you so much again. That's unbelievable.
Dude, that's awesome. I love it.
You don't need to do that, man. Go put that in your own portfolio.
It makes me uncomfortable when I get a few bucks kicked my way. That's
Okay, so man, that blows my mind.
What were we
Let's
talking
find
about? Oh, you were saying about Target. Just real
yeah.
quick, yeah.
So Target and Apple going up, man. What is one to do?
I think Apple I never really considered because the yield is so low, and that's one of my faults. Great company, fantastic company, but I can't get past that minute yield. They do grow it quick though, and then Target. We were in Ozarks, and I bought a share at I think $139. So now I'm like 172. It was at today or 170, 172, and it's hard. Like I'm like I probably should buy more, but I had it in my head from a European dividend growth investor who was thinking it could have went down to like $100 a share ish. Oh, by the way, I'm talking to him tomorrow morning, so that should be fun.
Oh, nice. What time?
Yeah, I'm not going to do it live. I thought about it, but
okay.
he
wants
is
to stay
anonymous.
Yeah.
Yeah. So just in case anything slips out or something, I want to be able to edit it. And, and I don't think he's ever done live before. So I'm just going to Zoom record it and then I'll make a video and a podcast out of it. But
I heard a rumor that he does that. He doesn't show his face because he films in the nude. It's like a weird thing he has. Have you heard that?
I've not heard that, but I can say
I just
he
made
doesn't.
that up. European DGI, man. I just made that up. I'm just goofing around.
Yeah, because when I did their podcast and I was super green and super nervous and I made a lot of mistakes that they edited out, he was not in the nude. He was not. So, but things may have changed. He's European,
Well, the summer times, man, it gets a little hotter. You can't wear as many layers. So. Yeah, that's cool, man. I'm looking forward to seeing that video. So for those of you who don't know, European DGI is 50% of the Dividend Talk podcast, which you can find on Apple Podcasts. They might be on Spotify, but if you're into dividend stock investing, really great podcast to listen to. They're putting out weekly episodes. A couple of really great guys across the pond that are just, they know their stuff. So definitely check them out. What
do you say? Welcome to the Dividend Talk podcast.
Welcome to the Dividend Talk podcast.
That's a Filmora song. I
really?
use Filmora to edit, and they do too. So that's preloaded on Filmora. And yeah, that is Derek. He's not anonymous. Derek from Ireland. He's from Waterford, Ireland. Okay. And I may try and hook up with him when we're out there and have a pint with him when we.
Yeah, man, you should.
When we go to Dublin. Yeah,
you should. I saw PPC Ian guys was just in Maui, and he he just randomly bumped into one of his subscribers, one of his followers, and they ended up grabbing a Starbucks together for a couple times while he was there and just sitting and talking dividend stocks. And man, I thought that was so cool.
Have you been noticed by anybody yet since you've been doing this out in public?
No, I have not.
Me either.
No.
Me either.
I don't expect it to happen, but it's fine. Like I don't know that if you guys do see me out in public, feel free to definitely say what's up, but I don't care about that too much now.
Yeah. All right, let's get to some more of these people. I mean, we're just
absolutely. We're like 25 minutes behind in the comments, so we're gonna move over to Darren, who asks, "What's your 3 favorite dividend stocks?" Let's just bust through these. We got to get caught up.
Yeah. You go first.
Okay, 3 favorite dividend stocks. Let's go Starbucks. Let's go Procter and Gamble. Let's go. Oh gosh, I really like EPD a lot. Really like EPD, but I don't know. I'm having a hard time coming up with a third for now. Russ, why don't you tap in?
Yeah, so they're all kind of like my children. I love them all. And there's stuff I dislike about all of them too. I can nitpick. But if I had to do the deserted island thing, you can only bring 3 dividend stocks with you. I would take PepsiCo, Johnson & Johnson, and Procter & Gamble. I would just sleep like a baby.
Yeah. Good, man. Good choices. I still need a third here. Let me jump over to Seeking Alpha, look at my portfolio real quick. So, Snap-on. Yep, Snap-on.
Oh,
number 3.
Solid, yeah.
Dude, I know you're a Snap-on guy too. Solid company.
I got 4 shares. I started a position, and now the bastards run up into the height. I think it's pushing 230 now.
It
And I think I have
is. Yeah, it's 231 per share right now.
I have 4 shares, average $202, and I just started buying them like maybe 6-7 weeks ago. I'm like, well, there goes that. I guess I'll just hold them until it comes down again, hopefully,
Yeah. Okay, man. Next question. This one's from Ben, and this one's for you. So, has your recent dabbling in options and collecting premiums changed the way you think about your investments at all?
Yeah, I'd lie if it wasn't. So I really enjoy selling options. So and Ben, by the way, has also started selling options himself, but he's been doing it on there's nothing wrong with it. It's just not my style on like Lucid, and put them up there, Ben, if you're still listening. I've a little bit, but I will say, put it this way, when I buy or sell, when I'm selling options, either a cash secured put or a covered call, I'm okay being stuck with it. Yeah, it's not ideal with what happened with Intel, but I still think because it takes 3 to 5 years for a chip cycle to go through, and Pat Gelsinger, who used to be the chief technical officer, he's only been at the helm like 18 months. So there's still some time for his turnaround to play out. But I didn't expect it to drop this far. I'd lie if I said I did, but I'm okay holding them. I think they're going to keep paying that dividend. They're okay for a while. They've got cash. But so like if I'm selling a cash secured put, I got to know that I'm okay holding them if I get stuck. And the worst case scenario is right now Intel. They were starting to drift down $47, and then the bottom fell out. I got in at 47, and you know what? I'm holding them for a while till I'm going to be stuck. I'm not taking a loss. So yeah, it's changed it just a little bit. If anything, it reinforces my conviction on a company, because I don't want to get stuck with a company that I'm not comfortable holding for the long term.
Yeah, absolutely, dude. Very well said. I'm in the same exact boat. Moving on, Jim, this is a really great question for you, Russ. How many positions do you have in your portfolio? And also, too, while you're answering that, Russ, can you kind of lay out the different portfolios that you have? Because I know you have at least a couple.
Yeah, so I'm trying to sneakily pull it up here. So on Simply Safe Dividends, I currently have 57 holdings. And yeah, so I have 57 holdings. But the difference is the bridge portfolio. So this on the board behind me, which I'm thinking of getting rid of. I don't know. I might
Here,
the board.
Put you solo for a second so you guys can see the board. Just so you can see the board.
Yeah. So this is 3 companies combined right here. There we go. I had to do it in reverse. The first one is the the bridge is the most fun. That's the one I started building in 2018. And that I've just kept adding to and starting to add more and more to. That one is taxable. That is one that is just, I'm trying to get as much income coming in as I can to pay bills, and just if we need the money before I retire, or before I can start, 65, I'm thinking, is when I would start withdrawing from the retirement accounts. And then I have the self-directed IRA, which is I took oddly enough, in March of 2020, I took $30,000 from the 401k and rolled it into a Schwab account. I just opened up an IRA at Schwab and I transferred the money over. It was like $100 in administrative fees, but there was no taxes because it was going from a qualified IRA account to another qualified pre-tax IRA account. So it wasn't a taxable event. So I had $30,000 in cash to play with. And that is the self-directed IRA, which is actually up to, it's grown pretty good. It is currently has a value of $41,688. And 2 years ago, that was at $30,000 even. So wow. $11,000 since March of 2020. So 2.5 years, whatever. Yeah. On my own, that's pretty cool. I obviously helped a bit by the market coming up. And then the third one is the Roth account, which so you can max out $6,000 a year into a Roth. That one's at Schwab. So those are 3 portfolios that I have combined. And 2 of them, like I said, are retirement portfolios that I'm not going to be able to access until I'm at least, I said 62 and a half, I think, is when you can start the earliest. But I don't want to touch them as long as I could.
Well, for the Roth, I think for the Roth, I think it's 59 and a half.
Maybe, oh, 59 and a half. Yeah. I
Yeah.
don't know what had that number. Yeah, you're right. 59 and a half is when you can start taking out.
No, man, we need to get you retired before then. We need to get you quote unquote retired before then. We're going to get you guys. This is our goal, okay? We're going to get Russ to that work optional by 50. We're all going to do it together.
Yeah, I love it. I'll take it.
I was going to ask you too, man. I'm looking at this. I'm still looking at this super chat from Mountain High, man. What are your thoughts on adding REITs to taxable brokerage accounts? I know that they're taxed as ordinary dividends. I get that, but do you see any instance where it makes sense to do that?
I'm sure there is. I just can't think of one off the top of my head. I ended up selling most of my REITs, and I have one left, which is Simon Property Group. I have 10 shares of it. So January 1st, I'm going to sell and then get the cash and move the cash to the Roth and then rebuy Simon inside of the Roth. And yeah, it stinks because it'll look like it has a higher cost basis than I actually do, because I bought a lot of Simon during the pandemic. And Simon Property Group, I'm a big fan of theirs. And I currently, have them at. Do you own Simon Property Group?
No, they're on my watch list, and I definitely think they're a top contender for a stock that I'd add to my portfolio. But I got to be honest, man. At this time, if I'm comparing SPG to KRC, I'm kind of starting to like KRC a little bit more, just primarily in terms of financials and the dividend stats.
Yeah. So I have 10 shares at $89. So it's like 115 right now, but I did add a few more in the 50s. Like I remember Realty Income and Simon were way down there out of the pandemic. So I don't know. It makes more sense to hold them inside of a tax advantage account because the dividends aren't qualified, meaning that they're a pass-through entity. They have that tax exempt status by what they have to do is pay out 90% of their earnings in the share in the form of a dividend, and they don't pay the taxes on it. We do, you do. So, so if it's in a tax advantage account, it doesn't really matter. You're not paying taxes anyway. So, maybe if you're already retired, I guess if you're already retired and living on your dividends,
Here's kind of my thought. I think in most cases it makes sense to have them in the Roth. The only instance I could think where it could make sense to have them in a taxable brokerage account is if you're someone who is really aggressive with this stuff and really plans to retire early. Like if I'm trying to retire in the next 10 years, I don't know that I'd want the real estate investment trust in a Roth, because that means I'd have another 20 years before I could even touch them. Do you know what I mean? Yeah. And so in that instance, it might be better off just to bite the bullet and pay the higher taxes, and have access to that money without worrying about the penalties.
Yeah, no, that sounds good to me.
Okay. I'm asking because I'm putting KRC in my taxable. I don't care what anyone says. I'm doing it.
I love it.
So anyway, I think this is a pretty good place to wrap up here. But Russ, man, once again, thank you so much for coming on with me tonight. I had a blast. I can tell from the live chat, everyone enjoyed having you here. And
good.
I mean, I know we've done this a few times, but man, you're always welcome to hop on the Dividend Happy Hour. You are always a welcome guest, and we always have a good time with you here.
My beer's broken. My glass is broken.
I'll shotgun this real quick.
It's broken. Oh no.
Okay. Well, hey guys, all of you out there in the live chat, I hope you guys have a fantastic weekend. Thank you so much for tuning into another episode of Dividend Happy Hour and listening to our gibberish for the last 58 minutes. And also for those of you who dropped a super chat, guys, this is the first time that's ever happened. It's blowing my mind that that's actually a thing, but thank you guys so much for doing that. And as always, thank you so much for the support on my channel. If you guys follow Russ as well, thank you so much for supporting us both. It really goes a long way. It really means a lot, and we're so thankful to have you guys in our corner on this journey to financial freedom. So with that, you guys all have a fantastic weekend, and we'll see you in the next one. I'm going to end